how much more dilution are we really looking at here? I want to sort of give you a little bit of pushback on that, if you don't mind. And why is the stock beaten down? What do you think the market is missing, and how will that hurt your capital raising capabilities going forward? Okay, but then that would mean you guys within the company understand the value, and if you do, why are you not keeping your shares? I mean, why would I want to own a company if the CEO does not want to own it? What are you looking to do? You hang up the phone right now. What are the next 3 steps that you do to make this a better company? What are you saying here? Do you think that 2022 will be a much more active year for all companies, including yourself? Going back to that URU Metals position that you had about 10 years ago, there's a couple of things that I do when I'm looking to do some background research into a CEO, and that's check what are the previous companies that he or she was involved in, obviously, and check the stock price and check the evolution of the shares outstanding. And there's 2 things that I noticed with URU Metals. You obviously know what happened to the share price, and it's not pretty. Dilution wasn't exactly pretty as well, and so that sort of became one of my main concerns as a retail shareholder of UEX. The number of shares outstanding that you have right now has more than doubled in the last maybe 2.5 years, right? And so following that path, you'd be at over 1 billion shares outstanding in about 2 years. So I really don't want to have that happen, but what's the plan there? How much more dilution are we really looking at here?
Well, I know a big chunk of our dilution recently came from the JCU acquisition, which we bought in at 42 cents a pound. So I know that's dilution. If you take that back a little bit, I wouldn't say we've had. If you take that out, that M&A piece out of the equation, and we have seen dilution, I would argue that it's pretty much on par, or even less so than some of our peer companies, because we've been more conservative in our approach to funding exploration work than them. And I think that same approach will continue for us over the next couple of years. We are looking to monetize some of the assets in the portfolio when there are opportunities, right? So that's going to be working and helping against the dilution. But yes, I would argue that when you were to compare us to even some of our bigger peers, we've been around for 20 years. We've never consolidated shares. And I look at some of our peers that have been around for 5 or 6 years. They have more shares outstanding than we do. I think that's a testament to trying to keep dilution as best under control as we can. But for us, monetizing assets is a key part of helping control dilution over the next little while. But it's not at any cost. To do work where you spend more money vending out the project than you receive back is probably not the best solution.
Mm-hmm. You often say this. You often say that you're being cautious with dilution, and I want to sort of give you a little bit of pushback on that, if you don't mind. And fairly honestly, the market has been tough since you did your first PEA about 10 years ago, 2011, yeah. Right? So, and I was still in nappies then, by the way. But basically, I'm just thinking, especially given the performance of your stock in the last 52 weeks, it's been even more painful, right? Things have not been great. I mean, something else that's also notable that I want to talk about is that most companies, even the larger ones, which they're Cameco's harder to move, their stocks are up, they're massively in the green. Cameco's up 45% because Atomprom is up more than that. Even they have NextGen, Denison, whatever, $1 billion+ market cap companies are all up, nice double digits actually. Yeah, most of them. So in the last 52 weeks, I'm talking about, yet you are now in the last 52 weeks in the red. Stock is actually down a couple of percent, not too much, but it's still in the red. And so that brings 2 important questions for me one of them has to do with that dilution. First of all, obviously the first question would be, why isn't the market liking what you're doing right now? What do you think the market is missing? And then also clearly you'll need more money before you can start cash flowing. We don't have to, it's just what it is. But it means that you have to tap the shareholders for that money before you can spin off that cobalt project. And that will represent even more share dilution, more than I would have probably had with one of the other companies, given that most of them are up quite a lot in the same period. So I guess, yeah, Roger, just to get to the point and ask the question finally here, why is the stock beaten down? What do you think the market is missing? And how will that hurt your capital raising capabilities going forward?
Sorry. When I look at where we position relative to others, I think it's one of the reasons is we're probably not as good at marketers as some of the others because we're a little more conservative than others. That's only a minor part of it. I believe our story is harder to understand because we're not when we look at our most imminent development project, which is Wheeler River, you're looking at that and going, okay, we're only a 5% stakeholder in that. Denison drives the bus. Most people have not heard of Millennium, strange as it sounds, so they don't understand that that's probably the greatest outside of Era. That's probably the greatest valued project in the Athabasca Basin. That will be developed by, certainly by Cameco. People don't understand that angle through JCU. I think people believe that our pounds at Shea Creek, and I don't think they're wrong because it hasn't moved for a couple of years with exploration programs. They question, I think, incorrectly, but I can understand why they do that. That Orano must not think these pounds are valuable, so therefore they're not as valuable as other people's pounds in the basin. And so I think that has an impact. For us, I think if Shea Creek moves along the path that we want it to, I think there would be people who would see our company very differently.
Okay, so you think the market might be wrong, or the market may not be noticing.
I don't think the market is wrong. I mean, I don't ever believe the market is wrong. I don't think they understand the value in places. I think that's very different, and that's up to us to demonstrate it.
Okay, but then that would mean you guys within the company understand the value. And if you do, why are you not keeping your shares? I mean, after the heavy selling that you did of your own stock in October last year, you now have just about, 200,000 shares to your own name, which is at 30 cents Canadian, is about $60,000 Canadian, which, by the way, that's coming from I think, 4.5 million shares that you had last fall in September after the stock options. And I'm sorry to say this, but I've heard from random people on Twitter who allegedly have more money invested in this company than its CEO does. And on top of that, you just, last month, I guess less than a month ago, you sold about another 10% of your position at a price that was almost 50% higher than the price today. So I'm probably being a little bit naive here, but I have no idea what your, obviously I don't know what your personal financial situation is, nor how these things really work with getting paid with options and stuff like that. But and by the way, I'm not trying to be judgmental nor disrespectful, so please excuse me if that's how I'm coming over. But why would I want to own a company if the CEO does not want to own it, even though they understand the project way better than I do?
Well, I guess I look at it a little bit differently than I guess most other people. Okay. I've sat over the last year on options in the money. I've probably lost $1 million worth of value of stock options in the money in the last year. So to say that I haven't hurt or felt pain, most of my shares were bought at much higher that I do own were bought at much higher prices than the current prices. So I've lost money there too. But I certainly don't. I do not feel when I look at the stock options, the money that I'm still sitting on and not exercising. That's, I guess people feel differently. That I look at that as stock ownership differently than maybe others do. We did exercise stock options this year that were expiring. And quite frankly, you're not going to leave money on the table for stock options that are going to expire. They were in the money when we exercised them. I understand that we have a plan in place for our management and directors to own 3 times salary over a 5-year window. We're working towards that. We sold, but when you exercise stock options, then we put in a restricted stock option plan this year. When they do get exercised, you do have tax bills to pay as well. And so have to pay those tax bills. So yes, I understand people have more money physically invested in the space than I do. I did lose about $1 million last year on our stock.
Okay, so
stock price of the thing. So I feel the pain. Believe you me, I feel the pain.
Yeah. So SEDI filings, they don't tell the full story. I think that's clear. Now you've made that clear, and I appreciate that. But you see how this might be pissing off some of the shareholders, right?
I completely understand.
Yeah. No, it's good that we're targeting that here as well. And I'm not here, nor am I educated, nor experienced enough to argue with any of that. So I'll just take it for what it is. I guess, there's calculations to be made. It's all public information too, obviously. But if we were to sort of switch the focus here for a second to what you've done in the past to what you plan on doing in the future, you just told me that there's some sort of a plan to keep more insider ownership of the stock. Am I getting this correctly?
Oh yeah, absolutely. We have a policy in place that we need to own three times salary, base salary over. It has to be accumulated over the next 5 years.
Okay, so you're solving that problem, and I like questions about problems, as you might have noticed, but I also have a hypothetical question that I really like asking. If there's something that, like, if you had a magic stick, that's a magic stick question. If you had a magic stick, you could just wave it and change whatever you want about the company, internally, externally, whatever. What would you improve at this point when it comes down to UEX, Roger?
Well, if I could change the magic stick?
Just a magic stick. You can change whatever.
Right now, I would manage that stick to get complete control or a controlling interest in Shea Creek, because we think that's the most valuable growth story through brownfields exploration in the uranium world.
Okay, so during next cycle, if we're talking, let's hope we're talking during next cycle, that'd be the next arrow.
Pardon me?
Oh, that'd be the next arrow.
Well, that's a big ask, but Shea Creek has 100 million pounds right now. There is of those pounds, 50% of them are in the basement in Kiena. Those cross-cutting fault structures, that vertical piece, we have 10 more of those places that have never seen proper drilling. Could we add 50 million pounds by making the next Kiena discovery underneath the unconformity deposits? That's possible. Could we make it bigger than that? Certainly. So does it become the next arrow? I'm not going to say that. But does it become, Shea Creek is already one of the most significant undeveloped uranium deposits in the basin. Could we make it the third or second largest one? I think very much so with that exploration work. Could we make it an arrow? Well, Arrow does have the advantage of being on the edge of the basin and basically at surface. So we're talking about being a little deeper than that. So the answer is, could it be the next Arrow? Well, no, Arrow's you've got a different geographical scenario, reality than we do.
No, that's true, but it's also like 500 kilometers from any infrastructure. So, everything has its price. And I like that we're focusing on going forward here. Let's talk about it. Let's talk about 2022 or maybe forward. What are your next 3 imminent steps? Like, what are you looking to do? You hang up the phone right now. What are the next 3 steps that you do to make this a better company? So,
execute our exploration programs that we've announced for new discovery, particularly at Christie Lake. That's probably the one that we're most excited about. I like Hidden Bay a lot, going back to the beginnings of the company's days. But I think that Christie Lake expansion drilling is pretty exciting. We're going to continue to work forward on monetizing those cobalt assets and getting more work and deals done to get more work done on our grassroots properties, because we think that the financing for both is out there. We're going to continue to help monitor what's happening at Wheeler River through the feasibility study. So those are the things that we're doing here in 2022. And then you look at things that necessarily you can't plan for. I think there's more opportunities to be had in the uranium space, especially since most companies, you picked a couple of notable exceptions that have been up, producer status group companies, but most of the rest of the companies we're seeing a relatively flat world over the last 52 weeks. And I think there's probably opportunities to be had out there as well. But we only want to bring opportunities that create, like a JCU kind of scenario, that create real value, not just something for doing something.
Mm-hmm. Okay, I like the plan. It's very clear. You just, you had it right in your back pocket, even though you didn't know this question was coming. Well, maybe it was predictable, but I'm just thinking about something else. Something that recently happened to me is I'm talking to my wife about what we plan on doing with our business going forward. And she's like, oh, well, we should get a new oven in 2022. And then we should get a new coffee machine. And I'm like, those things will cost us over, 100,000 euro. Where'd you plan on getting the money from? And so that's my question for you as well. Let's talk about budgeting. How much money do you need? And I guess we already talked about where you plan on getting it from, but what's the budget for all those 3 steps?
Well, last year we spent about just a little over $2 million in exploration work. We're funded with our G&A through the end of 2022 and into 2023, mostly through 2023. So we don't need money from a G&A perspective. We funded all of our exploration work with through 2022 right now. So we're not needing to go into the market right away in imminent future to raise money.
Okay.
So we're pretty comfortable on that front. That's, I think I lost track of the second part of that question. I apologize. So when it comes to raising money, we're fine. We're fine there. We're doing about 4 times the work that we did in terms of dollars in the ground last year.
Mm-hmm. That's an interesting thing that I wanted to talk about as well. And you answered the question perfectly, because actually the second part we had already targeted earlier. But if we look back at 2021, 2021 was actually the year that measured the first in the last 10 years of increased exploration spendings on uranium, if I'm not mistaken. So meaning 2021 was the first year since 2011 that basically made more companies decide to spend more money on uranium than what they did in 2020. But how come you weren't one of those companies? You just told me you only spent about $2 million on that work. Now you're looking to quadruple that, if I'm not mistaken. So in the realm of $8 to $10 billion. So why didn't you do that in 2021?
Well, that's a cool question, because the reality is that raising money and spending money are two different things.
Okay.
So I think you saw a lot of money raised in 2021. Okay, let's be fair. There was a lot of money raised in 2021. I would go back and ask the question, how much of that money raised in 2021 has been spent in 2021? Mm-hmm. I think you would find, particularly in the Athabasca Basin, a very small fraction of that money was actually spent.
Why is that? Why is it like you fair enough? How much of that money has gone into the ground? Why is not a lot of that money going into the ground? And where is that money going?
So 2 reasons, and it's probably sitting in treasuries for things that are going to happen this year. So if you were in the Athabasca Basin and you raised money in June of this past year, I would hazard a guess that you probably didn't spend more than 10% of that on the ground by the end of the year. One, because you didn't have the property, you had to acquire it. And you had to go through it, and you're looking at the new companies with the IPOs that were being done on these small little micro cap companies. Mm-hmm. 2, you have to get permits. And the permitting process in Saskatchewan is very transparent, but we've seen that that length of time increase from sort of a 3-month window into the 4 or 5-month window. So if you picked up a property and wanted and didn't have the money or didn't have the permit in hand, you probably didn't get on the ground before the end of the year. We also saw, and I know I have some comments on Twitter about how we couldn't get drill contractors. So that must have been our fault. Well, it's great how much if you ask someone to come and do work for you and they don't want to come work for you because they're busy working for somebody else. And in the uranium space, that was all. If you were to, I think the best example would be, we have a small Saskatchewan-based drilling company that we've used for a decade. And we might be one of their only 3 clients that they've had historically. We called upon them to come and help us in the fall with our program. And they said, sorry, we're tapped out. We're in North Bay working in the gold sector. So you couldn't get contractors, whether you wanted to or not, whether no matter what you're willing to pay them or not, in the fall. So I think you saw a lot of people who weren't able to drill holes because, quite frankly, they didn't have the contractors. And if your name was Cameco or Orano, you had the same problem we had. Okay. So what we've done with our budgeting, we always sort of look forward and say, we look at that list of opportunities we have. Which ones do we want to work on? How much is it going to cost? And how much can we raise? And instead of sit there and adjusting it mid-year, when we have done that in the past, we sort of build our plan up and say, what can we do? I do not believe, we were hoping to spend more than the $2.25 million we spent last year, but because we couldn't get on the ground from contractor availability, we had the permits in hand. We couldn't get the contractor availability. We probably left $1 million in the ground. And at the beginning of the year last year, there was a bit of a permitting challenge in 2022. That most exploration companies, in fact, all of us, didn't get permits till the second week of February. And so we lost 6 weeks of the season. Mm-hmm. That being said, when we look at our opportunities, we could have easily raised in the fall another $6, $7, $8, $9 million to do the work that we wanted that we could do. And we certainly have targets for. We were very conscious about how much we needed to do the work that we wanted to do It's not so much the dollars that are being spent. When I look at Hidden Bay and probably Hidden Bay and West Bear are side by side, and the depth of the target is about the same.
Mhm.
When we did our last West Bear program last year, we spent about $750,000 and drilled 16, 17 holes. That was a little more expensive than our program when we did the 140 holes for $3 million in 2019.
Mhm.
So you get a lot of targets for a very small amount of money on our Hidden Bay property compared to maybe others. So it's not so much the money, it's the amount of holes we're going to drill. And if you look at our plan for the winter, we're planning to drill 15,000 meters of drilling, which is pretty substantial. So we only raised the money we needed to do that work plus what we planned for the summer. Because we're seeing such volatility in stock price, and when things are going up or down and you don't know where they're going, you peg what you think you need opposed to what you can accomplish. We don't tend to raise money just to sit it and not hold in the coffers, because it's dilutive.
Yeah, no, that makes sense. And what you said about the, not being able to get hold of people to do the work, basically, I was hearing the same thing throughout 2021 from labs, like labs in Australia, labs in Canada as well. And I also saw some people blaming the company for it. It's great how much of an opinion people on Twitter have. Really, I'm happy that it is that way, because it stimulates a lot of discussion and stuff like that. Sometimes they can be kind of funny that way. But what are you saying here? Do you think that 2022 will be a much more active year for all companies, including yourself, on the news front?
I believe so. I believe so. Particularly for those companies that have raised flow-through money. They're going to have to put it in the ground this year for sure. Particularly if you're sitting on 2020 flow-through money where you got the extra extension. In Canada, the flow-through rules, you usually have to spend that money within you get a year and a bit to spend that money. So if you raise the money on January 1st or December 31st, you have to spend that money by the end of the following year. There were some extensions due to COVID done, so there's some pent up money being had in the space from a flow-through point of view, and some of that was ours from last year. I do think there's going to be more work done. We've seen it certainly in contracting availability. Now, because we had problems last year, we were way ahead of the game this year, getting ahead of both permitting and contractors. So we tied what we need up. So I'm not worried about contractor availability this year, or permitting, because we were way ahead of it, because we were realizing we didn't want to go through this a second time. I think the industry was caught a little bit flat-footed, because last year in 2021, I would argue, from my being in the uranium in the Athabasca industry since pretty much continuously since 2001, I don't think there was a slower year in terms of amount of work being done in the Athabasca Basin since probably 2003 last year. So we were all we talked as a group, the companies, the majors and the juniors, and we were pretty optimistic that with the lowest amount of meters being drilled in 2021, that the contractor availability wasn't going to be an issue. And even though we actually had a contracted contractor and they were obligated to work for us, we couldn't get them on site because they had decided to chase. If you look back the previous year, a ton of money was raised in the gold sector. And gold money, and the funny part is, money raised generally lags 6 to 8 months behind spend in the ground, regardless of the industry, because you got to put together the permits, get the team, get the contractors, and get it out and execute, and the seasonality issues as well. It just happened to correspond exactly to our summer drill programs, and it was, and they took up every drill in Canada was drilling in BC and Ontario and Quebec. It seemed.
That's true. No, but what you're saying to me, it seems like the Athabasca Basin might become less of a hostile place for juniors. And that makes me think this might be a good question for you, given how well known you are in the basin. And I won't make you name any names because you probably feel uncomfortable doing that. But looking at the companies around you, like in the basin, around the basin, are there any juniors worth taking a deeper look at in the basin right now? And if yes,